Welcome to the Transparent FX Academy. I'm Nick and I'm a top author trading with over 190k reputation points.
In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss.
If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts.
Starting here from the monthly time frame, what we can see is that we have a market which at the moment is testing and rejecting to the upside a quite strong level of horizontal support and demand, which has been acting in the past as a quite strong historical structure level. In fact, it was already acting as resistance here, preceding all these rejections to the downside. Then the market broke it to the upside with this impulse, and at that point, all that previous resistance was turned support here, and the market tested this level as support and has been rejecting it to the upside for quite some time. Now, in a situation like this, what we could expect is first to see a correction and then the continuation to the upside, because when you have an uptrend, what you expect is for the market to create higher highs and higher lows. Now, in this case, we already had the first higher high here. Then the market created a new higher high, which is exactly here. So the next logical step, since already a new higher low was created, is for the market to create this correction here. So essentially give us a correction, create a new higher low, and then continue higher, which is what you would usually expect in a situation like this when the market is in an uptrend. So from a monthly standpoint, what we could expect is for this market to see some short-term bearish price action and then longer-term bullish continuation. Now, let's drop down on the weekly time frame and see what we have. Now, from a weekly standpoint, we see a very similar situation. We can notice a strong impulse to the upside with yet no correction yet. So what we could expect, once again, is to see some short-term bearish price action being created from this level, and only then to see the continuation to the upside. Now, when you have an impulse and you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 0.3 to 50% and 0.618 Fibonacci retracements all lining up exactly in this area. So what we could expect here is for this market to correct to this zone as a first downside target, inside of which then we could expect to see some more institutional longing, which at that point could further increase the probabilities of a potential push higher away from the level. And we will be speaking about institutional longing in just a few minutes when we move to the order flow. Now, let's keep in mind that from a monthly and weekly perspective, we could expect some short-term bearish price action. And let's go and see what we have on the daily time frame. Now, on the daily, everything at the moment still seems quite bullish from a structure perspective. The market has been creating higher highs and higher lows. So in a situation like this, we don't have any kind of break of structure yet, which suggests that the market is still not ready for the correction that we have identified that is possible by looking at the monthly and weekly timeframes. And by the way, I also spoke about gold quite a few times in the past. I spoke about it when the market was here, explained all the reasons for which we could expect this push higher. Then again, after this break in structure and retest, I explained all the reasons for which we could expect this continuation to the upside. Again, after this impulse and correction from here, I explained all the reasons for which we could expect this impulse, correction, retest of structure and continuation to the upside, which again is exactly what the market gave us. And at the very last analysis, I explained all the reasons for which after this impulse and correction, we could expect the creation of this new daily higher high, which again is exactly what the market did. And by the way, I will link in description all these previous analysis, so you can go and check them out for more free education. But at the moment, what do we have from a daily standpoint? Now, before we dig deeper into what we have from a technical perspective, first, let's go and see what we have when it comes to the order flow. So what hedge funds and the big players in the market are doing precisely on gold. And what we can see here is that with the last reports, net positions have been decreasing quite aggressively. We went from having 207.2k net positions down to 201.9k net positions. So while for a long time net positioning has been increasing, now it is starting to decrease, meaning that first institutions were increasing their longs and decreasing their shorts, therefore moving to the bullish side for gold. Now they're doing the opposite. So they are essentially increasing their shorts, which in fact got increased from 66.3k to 76.8k, and decreasing their longs that went from 281k down to 278k. So this means that also this institutional side of the market is expecting that correction that we have identified that is definitely possible by looking at the monthly and weekly timeframes. Now, keeping that in mind, let's move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find on the screen and also in the description, so you never miss new updates. Now, back to the analysis. Well, from a daily perspective in a situation like this, what could we expect? Well, first of all, we have to identify the structure, which is the level that if the market will break it to the downside, it would be ready to continue lower. And that level would be this one here, which is the previous low. Because if you have an uptrend, so a series of higher highs and higher lows, the trend is broken, so it shifts to a bearish trend if the previous low gets broken to the downside, because at that point, you expect a shift from higher highs and higher lows to lower lows and lower highs. Therefore, the previous low in this case would be exactly this one. So if the market breaks below it, at that point, we could expect that correction to start. So if we will see the break below the support, in other words, that is where we have high probabilities on the retest of that previous support, which at that point becomes resistance, to see more institutional shorting, which at that point would further increase the probabilities of a potential rejection to the downside away from this level. So in a situation like this, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bullish to a bearish market, at that point, I wouldn't be surprised to see a potential push lower, completing this daily impulse correction and impulse pattern to the downside. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and on the main page of my YouTube channel. Here, you have the possibility to gain access to the most complete, all-inclusive mentorship program that I have created for you. As soon as you open the website, you will see this video breaking down everything included in the mentorship program. And in the program, you have the possibility to gain access to all my courses and also to the software, so the COT data software, which is exactly the one that we used in this analysis, the TradingStation software with Telegram Signals integration, which puts together everything that you need as a trader all in one interface. You also have the possibility to gain access to one-on-one private mentoring directly with me, so you will have my personal contact. And if you continue to scroll down on the website, you will see that directly from the website, you will have the possibility to register and gain automatically access with the email and password that you will create during the registration process. So at least I suggest that you go and check it out right now. The link is both in description and in the main page of my YouTube channel, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.